BlackRock.
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 What if I told you there's a company out there that manages more assets than the entire GDP of Germany and Japan combined? And that same company is secretly infiltrating every sector of the global economy, and by extension, every aspect of your life. The stock in your retirement fund, the phone you're using to watch this video, the airports you fly through, and the power grid supplying your home, all controlled by a single entity you've barely even heard of. Say hello to BlackRock, the ultra-powerful asset management giant that's quietly positioning itself to own the entire world. By 1992, the assets under BlackRock's management had grown to $17 billion. And just before the turn of the century, the company listed on the New York Stock Exchange for $14 per share. Since then, that figure has continued to grow, reaching an all-time high of over $1,200 in October 2025. And currently, the total assets under BlackRock's control is worth over $11 trillion. Yes, you heard that right. The company founded by a failed bond manager now manages more money than any country in the world, except for China and the United States. But how did one company end up holding the world's wallet? You see, as an asset management firm, BlackRock's primary function is to manage and invest other people's money. Think of it like having a trusted friend who really understands financial markets. Instead of trying to navigate those markets yourself, you hand your money to this friend and they invest it on your behalf in stocks, bonds, and real estate. The only difference is that BlackRock typically deals with large pools of money like pension funds, insurance reserves, and sovereign wealth funds. As the gold standard in the asset management space, the firm is sometimes also hired by public institutions. For instance, during the global financial crisis in 2008, the United States Federal Reserve beckoned on BlackRock to manage and value distressed assets from failed institutions like Bear Stearns and AIG. But sometimes contracts like this can come with risks of conflicting interests. You see, at the time BlackRock took on that assignment, it owned a 3.9% stake in AIG. So, technically, it was being paid to rescue its own investment. The Fed didn't seem to mind, though. In fact, when COVID struck in 2020, guess who they called again to stabilize the markets? BlackRock. That alone shows the level of trust the Fed has in the company. But even outside the shores of America, BlackRock is a renowned brand, trusted by top-level clients like the European Central Bank, the Government Pension Investment Fund of Japan, and Ukraine's Ministry of Economy. That's an enviable track record to have, but it would never have been possible without Aladdin. And no, I'm not talking about the Disney movie. You see, Aladdin is the acronym for Asset, Liability, Debt, and Derivative Investment Network, a super smart software developed in-house by BlackRock. It monitors over 2,000 risk factors, including interest rates, currencies, and geopolitical factors, to identify the best opportunities in global markets. At peak capacity, it performs 5,000 portfolio stress tests and 180 million option-adjusted calculations every single week, while generating over $1.6 billion in annual revenue. That probably explains why BlackRock has been hugely dominant and successful in the stock market. At the time of making this video, the company owns 29.4% of the equity ETF market. And together with Vanguard and State Street, it owns 88% of S&P 500 companies. That includes every major airline, bank, and every company that you know or patronize. Of course, that has its consequences, but before we talk about them, let's talk about something else that BlackRock is acquiring in droves: tangible assets. Expectedly, BlackRock's vast portfolio contains luxury properties like the Hudson Yards in New York, One Canada Square in London, and the Sony Center in Berlin. On top of that, BlackRock also owns a network of battery storage and waste-to-energy facilities through the acquisition of Acacia Energy and Vanguard Renewables in 2022. But by far the biggest tangible asset addition to its portfolio came in 2024, when it acquired Global Infrastructure Partners for $12.5 billion. That one deal handed BlackRock controlling stakes in critical global infrastructure, including Gatwick, Edinburgh and Sydney airports, the Suez Canal waterway, and the ports of Melbourne. Fast forward to 2025, BlackRock and the Canadian Pension Fund launched a joint bid to buy out the Minnesota power plant. The proposal, however, was met by strong resistance from the community. Local residents took to the streets in protest, and More Perfect Union did a 14-minute video documenting their grievances. But in the end, the Minnesota Public Utilities Commission approved the deal, and BlackRock added the sprawling power plant to its portfolio for $6.2 billion. On the back of that win, it paid $33 billion to acquire AES, a multinational power generating company that operates in 15 countries. Now, in case you're wondering, these investments aren't random. They are deliberately structured to generate consistent, predictable income. Electricity, for example, is something people simply cannot live without, so the demand is always there. All BlackRock has to do is provide the service, charge whatever price it deems fit, and the customers, unfortunately, would be forced to pay. But there's a second reason BlackRock is racing to lock up power-generating assets, and it's a much bigger play. You see, AI data centers are the new arms race for Silicon Valley's biggest players. Google, Amazon, Meta, and Microsoft have all made massive commitments to get a head start. BlackRock, however, is already one step ahead of them. Over the past few years, the company has spent nearly $70 billion in building or acquiring data centers. And by securing multiple energy assets, it has positioned itself to potentially power its own AI infrastructure entirely. And even if that doesn't happen, BlackRock can still profit by leasing those assets to companies looking to build large-scale AI operations. It's essentially a low-risk investment with massive upside. But that's not to say BlackRock hates high-risk, high-reward investments. In 2022, it invested $24 million in FTX. That ultimately turned out to be a catastrophic decision because the crypto exchange imploded into bankruptcy later that same year.
Cryptocurrency exchange FTX filed for Chapter 11 bankruptcy today following several days of enormous turmoil. Founder and CEO Sam Bankman-Fried has announced his official resignation.
Lawyers for collapsed cryptocurrency exchange FTX painted a grim picture for customers' chances of recovering their money today. It was the first day of bankruptcy hearings for the company. That sudden failure left an estimated 1 million creditors facing losses totaling billions of dollars.
Despite that setback, Larry Fink confirmed that BlackRock would remain active in crypto, and he kept that promise. In January 2024, following the landmark approval of its Bitcoin ETF, BlackRock launched the iShares Bitcoin Trust, IBIT. And today, that fund holds over 800,000 BTC, roughly 3.8% of all the Bitcoin that will ever exist. That's a significant milestone, one that confirms BlackRock's intent to redefine asset management by exploring and dominating every investment avenue available to it. And while that is great for the books, it doesn't exactly bode well for the rest of us. You see, due to the sheer volume of shares it controls across major corporations, BlackRock's influence on corporate America is enormous. Now, it's true that control isn't exactly the same thing as ownership. For instance, if BlackRock invests money from a retirement fund into Apple or Microsoft, it does so on behalf of every worker who contributes to the fund. But guess what? Whenever it's time to make big policy decisions in those companies, it's BlackRock that gets to vote, not the workers, not the retirees, and definitely not you. Now, here's the part that makes it worse. Most people don't even know that BlackRock is voting on their behalf. And yet, the decisions made in those boardrooms can have a very real and direct impact on their everyday lives. That is concerning in many ways. But the real worry isn't about proxy voting. It's about the fleet of tangible assets under BlackRock's control. By acquiring pipelines, toll roads, airports, power plants, and other critical infrastructure, the firm is strategically establishing itself as the world's most important landlord. And the rest of us? Well, I guess we're just lifelong tenants with zero representation at the negotiation table. But you see, BlackRock isn't the only landlord we've got. There's an entire gang of private equity firms using the same template to buy up the world, one infrastructure asset after another. And in this next video, we expose just how much of our planet they've colonized.